The biggest winner on the Dow today was Walgreens. Chevron was the biggest loser as we saw oil fall today. Over in the S&P 500, Qorvo was the biggest winner and CF Industries was the biggest loser. Stephanie, we go up, we go down, and we never really get anywhere.
Yep.
Trade drives us to a lot of places, except we always end up in the same place. Why are we stuck in a trading range?
Because the market doesn't like uncertainty, and we're all focused on the macro uncertainties. You mentioned trade, but it's also the Fed and what they're going to do. Are they going to be tighter than we think? The flat yield curve, we're all obsessing about that.
It got flatter today.
Flatter today after the Fed minutes, of course. And I think also international slowing down, right? We know that it's been slowing down. I still think it's okay because I think all the data points that I'm getting are still showing expansion, but it's less than what we had been seeing. The market doesn't like that. So all of these things wrapped up in a bow are not great for markets, and it's hard to see any sector really kind of leading the way. It's one day we have tech leading, another day we have energy leading, the next day we have financials leading. So it's kind of this rotational market, and I just don't see that changing until we see earnings.
Michael, I'm interested in the trade talk, and today in particular, as we've discussed the German automakers jumping on the possible news that we might see trade tariffs removed altogether between US and EU automakers. Clearly a big response in the German automakers. If we did get that kind of deal, wouldn't we see a massive rally across the board? Because it would suggest that all of these back and forth trade disputes are part of negotiation and they're not necessarily here forever.
Well, I think first of all, that's a great point you make. I think that this really is all part of negotiations. All these tariffs that are rolling on, I think are really just tests of the other side. China, for example, certainly is going to retaliate, and it's going to be a test coming back to the United States. But I think you're absolutely right. I think there will be a rally if you do see tariffs drop. But I think Stephanie's really got something here, that there's just so much uncertainty at this point. What you need are clear catalysts. And right now, we don't really have catalysts. What we have is 7 or 8 factors where we're all holding our breath, hoping the wrong news doesn't come out. It's hard for the markets to rally in that kind of environment.
What's less priced in? Is it that we ultimately end up with fewer tariffs? I mean, Wolf points out this possible deal that who knows if it's going to happen. But it seems to me we worry and worry and worry and worry about trade and tariffs, and are we going to have a trade war? And almost nobody says, what if actually we're going to have a lot lower tariffs because we're finally going to see people cave on these deals? I mean, that would be something that's totally unexpected.
Well, that's why the cyclicals have lagged, right? I mean, you look at the financials, they're down 20%, 10, 15, 20% from the January highs. Industrials are down. Energy just recently caught a bid, and that's an OPEC-driven thing. Look at the industrial metals. They've kind of held in better than I would have thought, but it's really these cyclical stories and stocks and sectors that have lagged because we are so concerned about trade. I mean, the trade as it stands now, the tariffs in place now, that's a tenth to 3/10 off of GDP. That's nothing. But people are concerned it's going to be much, much, much worse. And that's why you have utilities, REITs, today staples, healthcare, very defensive sectors leading the market. Technology, that's a bright spot. And that's because they have the secular growth. They should be rallying.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.